So lay some bartender wisdom on me. I'm lost in space here.
You're not where you want to be. You feel like you're supposed to be somewhere else. Well, say you could snap your fingers and be wherever you wanted to be. I bet you'd still feel this way, not in the right place. The point is, you can't get so hung up on where you'd rather be that you forget how to make the most of where you are. Take a break from worrying about what you can't control.
Hi everybody, that's Friday, March 21st, 2025, and yeah, let's take a look what order block have we had in today's session. So we have morning session, 9:30 opening, and you see that there is relative equal lows, down close candles, then market structure shift back above this intermediate term high. You see this favorable gap, which is inside this bullish order block. All of those down closed candles is bullish order block. Then we take projections, the highest point, the lowest. We see two standard deviation, and we need to see some kind of liquidity together. What do we have over here? Relative equal highs, and here we have relative equal highs, and here we have, yeah, let's go for this liquidity. This is very beautiful, right? Relative equal highs, and look what the price does. It does deliver towards those two standard deviations, and then coming back down and continues higher, takes equal highs. You see the price, you can check yourself. Didn't quite take the relative equal highs at 19,897, but then comes back up, takes the relative equal highs, consolidates for a while, goes higher, takes the equal highs, relative equal highs, 4 standard deviation, and equal highs at 19,976. All of those numbers you can see and go back in your charts and look for those equal highs. This is what you want to study. Also, there is a gap, I believe, at 19,821.50 on 15-second time frame, and you want to study that. And why? Because you have to understand two standard deviation is more important than gap. If you were targeting gap, let me show it to you. Here you go. You see the gap? That's very, very, very strong magnet. But when you have two standard deviations and you have gap, you want to target two standard deviations, because look what the price did, and it's not the first time, and I want you to remember this too. What the price does? Price goes to two standard deviation, coming back inside the range, consolidates, and only after a while, after a few hours, it goes back up to that gap. So we want to be quick in and out. And yeah, let's take a look how it looks in terms of risk reward if you were entering inside this fair value gap. Okay, let's not make it perfect. Let's make it from the very beginning of the order block, and the stop loss is at the lowest point. So just you don't make it perfect. So if you were targeting two standard deviations, that would be 1 to 2, which is not bad at all. And if you were targeting 4 standard deviation, those relative equal highs, that would be 1 to 4, which is great, isn't it? Here you go. And let me delete all of that and show you the other time frames. Monthly. Here you go, the monthly. Weekly. I'm looking for this volume imbalance for the next week. Daily. This is how it looks on daily. Then 4 hour. 4 hour, and all of those relative equal highs back up here. Today we took liquidity below this pin candle liquidity. Alrighty, let's go down to 60-minute time frame. 15 minutes. 9:30, and I want you to pay attention to those equal lows. Put it at in your journal so that you remember that number, 19,663. Later on you will be using this as a target for shorts. So this is 9:30 opening, 8:30 opening, and midnight opening. Here how it looks. 5-minute time frame. 4, 3, 2, 1. And by the way, I'm gonna explain you when you can buy order block despite having relative equal lows. It looks scary, right? I mean, to buy here once you have relative equal lows, and you can buy those only in case if you have relative equal lows on lower time frame. So it means price rejected this consequent encroachment of that wick, and I'll show you on 30 second right now. When I go to 30-second time frame, you see this relative equal lows. If the price took those relative equal lows and then you have displacement to the upside, it's not necessarily it has to take this one, okay? So it's pretty safe, your stop loss below this low, okay? Yeah, and this is the 30-second time frame intraday for the morning session, and I'm gonna show you for the afternoon. Here you go. Hopefully you found this insightful, and until I talk to you next time, all the best and take care. Wow, what you just learned here could change the whole approach to trading. Are you ready to take the next step? Your next big insight is just one click away.